All right, I'm going to add my perspective on Chapter 2, which is called An Introduction to Cost, Terms, and Purposes. So the basic learning objectives, we want to know what a cost object is. And we want to distinguish between direct and indirect cost, fixed and variable cost, and then this terms, period, and product cost. So this is going to be the foundation that we're going to need to move on to the next couple of weeks when we talk about cost, volume, profit analysis. We'll be spending 2 weeks on that really important topic, but right now we're going to talk about cost terms and cost behavior. So the first thing I want to be clear about is what costs are. So we have cost is basically what we give up to acquire a resource or develop a resource. And this actual cost, that's the amount I've actually spent on a particular item. And there's budget costs. So many times organizations are going to compare their actual with their budget to see if they're meeting their objectives. And one term that I'm going to use, and you're going to see over and over again, is something called a cost object. And a cost object is simply anything that we want to know the cost of. So we do this when we get into activity-based costing. In a couple of weeks, we're going to talk about cost objects. And basically, it can be the cost of making an automobile, the cost of making a computer, it could be the cost to run a particular service. So if you think about Northeastern University as an example, it has many cost objects: the cost of running a program, cost of running a classroom, cost of running a registrar's office, etc. And the same is true in business environments. I want to know the cost of making a product or delivering a service, or the cost of a particular sub-operation within an organization. So here's some examples of cost objects. You can see they vary. Just keep in mind, it's anything we want to know the cost of. And we want to know the cost of things because we make a lot of important decisions around cost. We decide prices, we decide whether we're making a profit or losing money. And so all of these things come into play when we talk about cost objects. And so knowing cost and knowing how to determine cost is an essential element of the profession of accounting. So when we talk about basic cost terminologies, we have something called cost accumulation. So we have to accumulate cost until we're, so usually if I'm manufacturing something, it starts out as raw materials, goes through a work in process, becomes a finished good. So I have to accumulate cost all along the process. And as I incur costs, I have to assign those costs to a particular cost object. So when it comes to direct cost, like direct material and direct labor, I can usually trace those directly to the cost object. When it comes to overhead cost, I have to decide how I'm going to assign my overhead cost in a way that makes sense. And that's going to be a little bit tricky. And when we get into activity-based costing, we'll see some of the challenges that come into play. But right now, we're just understanding the basic cost terminologies. So direct cost, a cost that can be conveniently and economically traced to a cost object. An indirect cost cannot be conveniently or economically traced. Okay, so when I think about direct cost, I think about direct labor and direct materials. When I think about indirect cost, I primarily think about overhead cost, rent, depreciation, indirect labor, marketing and advertising. Those things are often more difficult to trace to a cost object. But with that said, we need to find a methodology to do that. But right now, again, let's just look at the basic overview of what we're talking about. So here's an example, BMW example. Direct cost, I can usually trace those with a high degree of accuracy to the cost object. Indirect cost, I have to come up with a method to assign them. So there's more of an art form when it comes to indirect cost. And when we get to activity-based costing, you'll hear me talk about resources consumed. Because when you think about direct cost, when you think about direct material and direct labor, we can always trace those directly to the cost object in a very specific and accurate manner. When it comes to indirect cost, we have to really give it some thought. So we don't want an arbitrary allocation method. We want to be more specific. And again, we'll come back to that. So here's some examples. Direct cost, direct material, direct labor, and here's some indirect cost. So again, at this point, we just want to get the terminology. So what affects whether I classify something as direct or indirect? Well, basically, if I can easily trace it to the cost object, cost effectively trace it to the cost object, I'm going to call it a direct cost. And if it's something that I know supports the cost object, but is not clearly assigned to it, then we're going to call that indirect cost. And again, going back to this example, most of our overhead costs are going to be indirect cost. Okay, so the next thing that comes up in chapter 2 is cost behavior. And cost behavior is going to be important for our next couple of chapters because it's going to give us the foundation to understand what's called the cost volume profit income statement, which we're going to get into next week. But at this point, I just want you to get the basic foundation of what cost behavior is. So when we think about cost behavior, we're going to think about it in 2 dimensions. It's either going to be variable or it's going to be fixed. If it's variable, in total, it changes in direct relation to the activity level. So if you think about every time I build a product, the direct material and the direct labor changes in direct relationship to the number of units I produce. So that's going to be a variable cost. Fixed costs are going to be those indirect costs. Those are costs that don't change irrespective of how many units I produce. So my rent, the salaries I pay to managers, those costs are going to be there irrespective of the number of units I produce or the number of service calls that we make. Okay, so when we think about variable costs, changes in total changes in direct relation to activity level. Think about fixed costs, it remains constant. And that's in total. On a per unit basis, it's a little different. Variable cost is constant and fixed cost is inversely related. But it's going to be important that we distinguish between variable and fixed cost, particularly as we get into the next couple of chapters. But right now, terminology is all we're after. Okay, so more definition here. Variable costs are constant on a per unit basis. If a product takes 5 pounds of material each, it stays the same per unit regardless if 1, 10, or 5,000. Okay, that's one of the assumptions. Fixed cost is inversely on a per unit basis, inversely related to production, but in total remains constant. Okay, so here's a nice summary of it. Total per unit. Okay, so we're going to come back and look at variable cost and fixed cost throughout the semester. So make sure that you have a very firm understanding. Here's how it looks graphically, and this is in total. Right, variable cost changes in direct relation to activity level. Fixed cost remains constant. Okay, we're not going to worry about mixed cost. There are cost elements that have both fixed and variable cost. Not a concern for our course. We're going to really look at fixed and variable cost as the foundation for our being able to do cost volume profit and differential costing, which we'll do a little bit later in the semester. So cost drivers, we'll come back and talk about this a little bit. It's important that we understand what drives cost, because what we really want to know ultimately is what resources are being consumed. And so if I put a particular activity in place, why did I put that activity in place? What's driving that cost? Relevant range is simply the planning level that we're at. And so fixed costs are going to fixed within the relevant range. So this is our normal level of activity or our planned level of activity. Okay, so cost can be classified as direct, variable, fixed. Okay, so again, these are just some basic terms. Okay, some more terminology that you can read through. So the other thing that's mentioned in chapter 2 is different types of firms. So when you think about the different types of firms, manufacturing, merchandising, or service. Manufacturing makes products. Merchandising sells products, so they buy products from a supplier and they sell them to their customers. And services don't have products, they have services. So that when we think about manufacturing and merchandising, we need to know the cost of their products that they sell to their end customers. Manufacturing we're going to look at direct material, direct labor, and overhead. With merchandising, it's a little bit simpler typically because we're going to look at the purchase cost as being the cost of the cost object. When it comes to services, we're going to be interested in knowing the cost of the cost object, and the cost object is the service that we deliver to our customers. So it can be legal, it can be engineering, it can be software projects, etc. So we're in the U.S., at least, and in many other countries, service is becoming a much larger portion of the overall economy. So, understanding cost and cost terms doesn't just apply to manufacturing and merchandising, it also applies to service industries. So when we talk about inventory, which is something that merchandising and manufacturing companies have, we can break it up into these categories. So manufacturing companies can have direct material, work in process, finished goods. Merchandising companies typically only have finished goods. Okay? They typically don't have direct materials and work in process. These are functions of manufacturing companies, but both manufacturing and merchandising companies are going to have finished goods. Service organizations typically don't have inventory. So commonly used classifications of manufacturing cost: direct material, direct labor, indirect overhead cost. So direct materials are those materials I can directly trace to a cost object. So if I'm building a Tesla automobile, it's the windshields, it's the tires, etc., the materials I can directly trace. The direct labor are the people who spend time assembling the automobile or the computer or whatever. And the indirect costs are all the other costs: the rent, the depreciation, the utilities, and all the other things. So inventoriable versus period cost. So that's very important in the accounting world, because inventoriable costs are costs that flow through the process of go through the balance sheet as inventory. So the direct materials, the work in process, the finished goods, they all sit on the balance sheet. So anything that's related to the cost object that I sell to others, I'm going to put into inventory and then move to the income statement when I sell it. Period costs are things that, as I incur them, they go right on the income statement. Selling, general administrative, and anything that's not related to building a product that I sell to my customers, it's going to be a period expense. It's going to go, not going to sit on the balance sheet. It's going to go directly to the income statement in the period that it's incurred. Okay, so here's the flow in a manufacturing facility. Direct materials goes to work in process, to finished goods, and all of this is on the balance sheet. And then when I sell the product, it goes to the income statement as a cost of sale. Merchandising company, they don't have stock rooms and work in process typically. They just have finished goods inventory. Again, on the balance sheet, goes to the income statement when sold. I'm not going to worry about these other measurements. Okay, and here's a bunch of terminology that you might want to review. All right, so that's my quick review of Chapter 2. I've provided you a Kahoot exercise to practice as well.